Real estate ups and downs have you confused? Keep watching. We'll focus on what you need to know. It's mid-month and I typically send out a quick email to show you the trends in the local real estate market. Given the dramatic increase in interest rates over the past few months, I think it's appropriate to dig a little deeper into the numbers and the impact on you, the homeowner. The Las Vegas housing market has been brutal on home buyers for the past 2 years, but signs suggest that the market's balancing out. I'm going to touch on the most up-to-date statistics on the 4 big bellwethers of the housing market: home prices, number of new listings, total availability and days on the market, and mortgage rates. For the month ending in August, these critical variables show that the market is moving away from a pure seller's market to something more balanced. The latest August data from Las Vegas Realtors places the median home sale price at $450,000. And for month-end August, listing prices rose by 13% over the same month last year. That marks over 2 years of double-digit price growth. However, rapid interest rate increases are resulting in a deceleration of the price growth. Just look at the average sales price over the past 4 months. Average sales price hit their apex in May at $482,000. An average sales price dropped to $450,000 in August. As a matter of fact, economists at Zillow just forecast home price appreciation in Las Vegas to be only 1.9% for the coming year. Does this mean housing prices are crashing? No. Existing listings are taking downward price adjustments to reflect a higher cost of borrowing. In addition, some sellers initially listed their homes for exorbitant amounts in hopes of making a quick sale, and now they're facing the consequences of mispricing their property. I saw this in my own neighborhood, where a house was listed overvalued, did not sell for 4 months, and eventually sold for 20% below the original list price, which was its true market value in the first place. Are home sellers dropping out of the market? Absolutely not. 4,000 existing homes were listed for sale in August, virtually the same amount as last August. What is changing is the number of sales. A quick look at this data tells a story. It's clear that the Fed's decision to raise interest rates to fight inflation is having an impact on buyers and home affordability. The drop in sales has resulted in a massive surge in overall availability, with over 10,000 homes for sale in August. At times last year, there were only a 2-week supply of homes. That's increased to 4 months. Last year, 88% of homes sold under 30 days, and that's dropped to 71%. That's still reflective of a pretty good seller's market. According to Freddie Mac, the average 30-year fixed-rate mortgage increased to 6.02, a steep spike from the previous year's 2.89. It's expected that the Federal Reserve will continue to raise the Fed funds rate, which is the rate that banks pay on excess reserves. There's a strong correlation between the Fed funds rate and short-term treasuries. However, most 30-year mortgages are priced on the 10-year treasury, and the Fed funds rate has much less of an impact on long-term treasuries. So the long and short of it is, homes are selling if priced correctly, and prices have dropped about 6% from their peak. Sales have decreased and inventory levels have increased, reducing the inventory squeeze on home buyers. Moving toward a more balanced market, 71% of homes still sell within 30 days, and long-term mortgage rates have doubled in the past year. At what point do they level off and stabilize? Watch the Fed. Buyers may want to consider lower rate adjustable rate mortgages, locking in a lower rate now with the possibility of downward adjustments a year or 2 out. Personally, I think a lot of homeowners thought about selling, but we're afraid of the other side of that transaction, going out and trying to buy in an extremely hot market. The market has calmed down, it's become more rational. Of course, showing you data that reflects average prices can show you trends in the market, but it can't tell you what your home's worth. That's where I come in. Just like reviewing your 401k or IRA statement occasionally, it's a good idea to keep abreast of how much your home is worth. In the meantime, if you're thinking of selling, or just looking for more information, or give me a call at 312-898-7018. And thanks for watching.